Your core banking system isn't an asset anymore. It's a liability. Still waiting to modernize? Because while you're waiting, something is happening that most bank executives don't see until it's too late. You're not just running on old technology. You're bleeding opportunity every single day you delay. Here's what we mean by that. When bank executives think about core banking, modernization, they think about the technology itself. Fiserv, Jack Henry, FIS. The big three platforms that power 70% of U.S. banks. They think about migration timelines, implementation costs, system integrations. They think it's an IT project, but that's not what this is about. This is about the $47 million in revenue opportunity that institutions are leaving on the table while they run on systems built for a world that doesn't exist anymore. We work with banks across the country, community banks, regional institutions. And here's the pattern we see over and over. The CFO looks at core modernization as a cost center. 7 figures. Maybe 8. Implementation risk, training, disruption. So they push it to next quarter, then next year. Meanwhile, their digital-first competitors are processing loans in days while they're still measuring in weeks. Their customers are opening accounts with Fintechs because the digital experience is faster. Their commercial clients are moving payments volume to platforms that don't require phone calls and PDFs. The cost isn't the modernization. The cost is what you're losing every month you don't modernize. And most executives have never calculated that number. They're tracking their core banking costs, but they're not tracking the inverse, the revenue they can't capture because their systems can't move fast enough. The customers who leave because the experience feels like 2009. The lending opportunities they miss because their loan origination process is still manual. That number, that $47 million, that's real. That's the opportunity cost we calculated with one institution over a 5-year window. And they had no idea until we showed them. So let me tell you about a regional bank we worked with 18 months ago. Robert Daniels was their chief operating officer. Sharp guy. Ambitious. But cautious. He'd been at the bank for 12 years and watched 3 digital transformation initiatives stall out. So when we first sat down, he was skeptical. He adjusted those horn-rimmed reading glasses and said the same thing we hear from a lot of executives. We know we need to modernize, but the timing isn't right. We're in the middle of compliance updates. Our board isn't ready for a 9-figure investment. Maybe next year. So Marcus Chen, our AI business strategist, pulled out his tablet. He didn't show Robert a pitch deck. He showed him data. Real-time analytics from their own institution, loan application abandonment rates, digital banking adoption compared to peer institutions, customer attrition in the under 40 demographic, payment processing timelines. Then Marcus overlaid something Robert had never seen, a revenue opportunity map. Every product they couldn't offer because their core system didn't support it. Every customer segment they were losing because their digital experience lagged. Every operational cost they were carrying because manual processes were still filling the gaps that automation should have closed. Robert went quiet. He took off his glasses, cleaned them slowly. Then he asked the question that changes everything. What would it look like if we actually did this? Here's what they did. They were running on a legacy Jack Henry platform. Not a bad system, but it was configured for a banking model from 15 years ago. Batch processing overnight, limited API architecture. Digital banking bolted on, not built in. Their lending process required 4 internal handoffs and averaged 19 days from application to funding for a commercial loan. Consumer loans were faster, but still required branch visits for documentation. They were losing deals. Not because of credit appetite, because borrowers went somewhere faster. They made the decision to modernize. Full core transformation. New Jack Henry configuration with modern API infrastructure. Integrated their loan origination system. They went with Abrigo, best in class for workflow acceleration. Rebuilt their digital payments architecture to support real-time processing. Connected everything through a data layer that let them actually see customer relationships across products instead of across silos. The implementation took 11 months. Not easy. But here's what changed. Loan processing dropped from 19 days to 4 days for commercial loans. Consumer loans went to same-day decisions with digital document collection. Their digital account opening went from a 20-minute process with branch verification to 7 minutes, fully digital. Payment processing that used to batch overnight now settles in real time. Their customers started noticing. Then their prospects started noticing. But here's the number that made Robert a believer. In the first year post-implementation, they captured $42 million. In lending volume, they would have lost to competitors. They reduced operational costs by $6.3 million annually through automation. They grew deposits in the under 40 segment for the first time in 5 years. Their digital banking adoption rate jumped 37%, and their Net Promoter Score, a metric they'd never tracked before, put them in the top quartile for regional banks. Robert told us later that the board meeting where he presented 12-month results was the easiest presentation of his career. Because the ROI wasn't theoretical anymore. It was right there in the numbers. The $47 million opportunity they'd been missing wasn't a projection. It was measurable revenue and cost savings they were now capturing. So here's what you need to do. Not 5 steps. Not a transformation roadmap. One thing. This week, schedule 30 minutes with your CFO and your CTO. Pull 3 numbers. First, your loan application abandonment rate. Second, your customer acquisition cost for digital channels compared to branch. Third, your operational cost per transaction for payments processing. Just those 3 numbers. Then ask one question. What would a 10% improvement in each of these metrics be worth over 3 years? That's your opportunity number. And once you see it, you can't unsee it. That's when the conversation shifts from whether you should modernize to how fast you can start. Because here's what institutions are realizing. The banks winning right now didn't wait for perfect timing. They realized that the risk of waiting was bigger than the risk of moving. And the competitive advantage they're building with modern core infrastructure. That gap gets harder to close every quarter. We help banks navigate exactly this transformation. Core banking modernization across Fiserv, Jack Henry, and FIS platforms. System integrations that actually work. Loan origination acceleration. Digital payments architecture. The full stack. And we do it without the disruption that keeps executives up at night. The window is open, but not for long.